the Group CEO of EquitiesTracker. Up next, for our first keynote speech, we will have Mr. Alvin Vong, the Group CEO of EquitiesTracker, delivering it to us. He is here to provide his insights on the Malaysian market, where there's a lot going on right now. Is it up or down in the market? We will get our answer later. His extensive knowledge in stocks, exposures in fund management business, and not to mention his thoughts on cryptocurrency will definitely make this session as fulfilling as it is. Let us welcome Mr. Alvin Vong.
Good afternoon, everybody. I'd like to thank all our sponsors, Malacca Securities, Bursa Malaysia, and all of you guys who are making the Sunday here to spend some time with us and to listen to us. Right? Thank you very much for having me. Actually, I'm very nervous. I'm nervous that I cannot finish all my slides. I've been given 25 minutes, so I might have to skip some of them, okay? But I'm gonna give it a go. All right. Since the MC has already introduced me, I'm gonna kind of skip that. But just to give you guys a very quick rundown what EquitiesTracker does, we are a data and financial analytics platform. We also run investor education, and also very recently, we also license fund managers by the SC as well. So I'm going to share my thoughts, and at the end, I'm also going to share a little bit about what we are investing in the fund as well. Okay, so this is the US market, yeah. And a lot of my slides I sent it 2 weeks ago, so they are off SF Jan 12, yeah. So this is the US market. So if you look at the linear regression line, you can see, I think even if you don't do the linear regression line, you can see it's been on an uptrend, right? So it's doing really, really well. Anyone has an idea what the Malaysian one looks like? I think Chuck kind of mentioned it just now, right? It looks a bit like this, okay? So, I come from a background as a value investor. So what do? We're not just contrarians by nature, but the whole idea here is we look for price and value divergence. Essentially, we try and look for stuff that has not gone up yet, that should be worth more than they are, right? So this is the situation today. This is where the Malaysian market is today. So you can see there is a stark contrast, right? Why is that? Yeah, why is that? So if you look at Malaysia, which is the light blue line, yeah, against our global equities index, this is a global equity index, you're going to see something quite interesting, right? You see our light blue line and the dark blue line. Generally, the all-world equities index go up, our markets also generally go up before lah. And then there was a cutoff point in 2018 when the first time we changed federal government, right? You can see there was no correlation after that. Very clear. Market go up, global markets go up, what happens to us? We stay like that, okay? Markets go down also, what happens to us? We also stay like that, okay? Look, this is very data driven, and this is really what it is. However, of course, as you all know, all Malaysians know, we've had 5 different prime ministers in the last 5 years. If you're a foreign investor coming in and looking and say, if you were investing in a company, you probably wouldn't invest in a company if they keep changing CEOs every year, right? Would you agree? It's kind of the same sentiment. So very sentiment driven, and you can see there's a big discrepancy, right? So if you look at Malaysia today, really, if you just look at some really good, we still have a lot of good quality stocks, right? Unfortunately, when we say we look at the Malaysian market, everyone thinks straight away, oh, we only serve the Malaysian markets, right? But actually a large bulk of our listed companies that are listed here actually do business overseas. They also earn US dollars overseas as well, right? I think that's the misconception, and that is that sentiment that we're at, right? So, so you can see, world equities past 6 years, they're up 40%. We're still down minus 10%. So what it means is that generally for the same quality of stock that you find here on a local exchange versus some of our peers or even in this region, you're going to see that we're trading at actually much lower PEs, right? And that's what we do. We look for divergence, right? We try and look for laggards, right? So if Malaysia, in the next 2-3 years, potentially there is stability in the government, actually we have a lot of catching up to do. Catching up. So even if world equity market stays stagnant and we catch up, potentially in that period of time, we could be the best performing market in our region, simply because of what has happened in the last 5 years. Yeah. So you can see over the last 5 years as well, you can see this is the blue line, which is our Malaysian index. We're still down, right, around the ASEAN region. But this year, what we're seeing is actually just beginning this year, January, February, quite positive vibes that we're seeing. Trading volumes at all-time highs. You know, just now I was speaking to the moderator, if it goes, usually there's a big push up, there's normally a pullback, but we actually saw a very light pullback and then prices are still quite there, right? So we are very much at a psychological breakout point for the KLCI at 1,500 points today, okay? Now, how do we do in terms of ringgit? I think all Malaysians, all of you guys here in the room probably know this, right? It's no open secret. Malaysia is always number one for something. So last year we were number one for probably worst performing currency in this region, right? Not necessarily a bad thing, guys. Not necessarily a bad thing. Now, so if you look at where we are in terms of Malaysia, now, really the why, right? Why is the ringgit so weak? Why is it so battered down? You know, I've been trying to find out as well why, right? If you look at this, if you look at our current account surplus, we've always been positive, even through COVID, right? Because we're an export nation. So we still bring in as much US dollars as we did before, but our currency is battered 20-30% against the greenback. So the question is, has the Malaysian currency depreciated or has the USD actually appreciated? I believe the latter is actually more obvious, yeah? As you all know, why has the USD all appreciated? Because the Federal Reserve has done something unprecedented. They've raised interest rates 11 times from literally 0 to 5.5%. In less than 18 months, right? So what has happened is that everything, there was a flight for safety in the last 2 years, flight to safety. So all fund managers, all global funds, they are based in USD. As long as they're based in USD, they would put back into USD and they get 5.5% now. It's fantastic, right? Why need to go and take risks in other markets, emerging markets, and make money, right? But what we're seeing is, in terms of recovery post-COVID, if you look at non-financial numbers, in terms of airport numbers, we are almost back there. We're 75%, yeah? Now, what is interesting is this, right? So so the Fed meets 6 times a year, and every time they do a forecast, right? So you can see, if you can see at the bottom here, the last forecast for this year was actually meant to be 5.4% interest rate, right? The last time they met, they've actually dropped it to 4.6. So the expected interest rate drop for the Fed this year is actually quite significant, right? It's actually 4.6% as opposed to 5.4 before, right? So I think word on the street is quite easy. We know that the Fed is likely going to drop interest rates this year. Now, if you're a fund manager and you're in funds, right, your long-term view now is that interest rates are going to move back to a normalized 2.5%. That's what it's going to be like. Now you have to start chasing yield. You now have to work a little bit harder, right? My guess, it's likely you're going to start seeing fund flow moving back into emerging markets. They have to, because if you're looking purely at US for growth, yeah, there's some growth. But really, the growth is in this region, right? That's why they call this the Asian century, right? The growth is around this whole region. Like 4 hours around us is 750 million people, right? That's twice the size of the United States, right? And we're all coming from a much lower base, yeah? So this is what is expected this year, 75 basis point drop. That's what's expected, okay? Now, in terms of, you know, where are we? So we did this study a while back. I just wanted to share with you guys. We looked at it from the last 30 years. We wanted to measure on average bull and bear markets, how long do they last, right? Just look at how many months on average, yeah? So this is what we found, just to give you guys an idea. On average, bear markets, this is just a simple average, yeah? On average is 1.3 years. That's how long they last. Bull markets last, you can say, almost 5 times longer. Now, this is based on the US numbers, yeah? So if you look at Malaysia, how long has our bear market been? Literally January 2022. So we've now gone past 24 months, as we count last year as the 24th month, yeah? We're now 25th month. So we've gone way beyond the averages of being in a bear market, right? And we're just using statistics to kind of rationalize exactly where we're at, and we're trying to look forward, right? This is the average, right? And here's the thing, right? We know people like to time the market. I know investors like to time the market. Every time someone finds out, oh, you're in stocks, is it a good time to buy, right? They always ask me if it's a good time to buy. They never ask me what to buy or when, whatever else, or when to sell. Everyone asks me, is it a good time to buy? That's all that matters, right? And this is an article that was published by Forbes back in 2015. The headline was very simple. They did the same study. On average, bull markets last 5 times longer than bear markets. So if you try and time the market, it's quite difficult. But really, at the end of the article, what it says is actually time in market matters more than timing the market. Yeah. If you're a long-term investor, this will resonate with you. So, so we are probably, from the looks of this, if this sustains and continues, we are probably very early stages into the bull market. That is my take. Or start of the bull, right? So if you're worried, oh, I missed out on that run. If you look at the long averages, bull markets last 5 times longer than bear markets. Yeah, that's where we are. So just kind of, we're just starting, yeah? It's just the starting. Now, to my next topic, so I was, tasked to, I wanted to share certain elements like what stocks are we actually putting in our portfolios, what stocks are we investing in, or what sectors are we actually looking at. So this is my second part of my presentation I'm going to share. So one of probably the most boring and overlooked industries. Anyone here? I know everyone finds AI sexy. That's for the next speaker, right? I want to talk about the least sexy thing here. Palm oil, right? I think everyone here in Malaysia knows what palm oil is, right? You drive around, you see palm oil estates, right? Okay. So we did a price study and just kind of have a guess where it is. So if you look at it, I can't exactly see the time frame here, but I believe that was in the 1980s, right? 1990s, early days, right? The average price of palm oil back then was 1,005, right? 1,500 per metric ton. And you always see every 10 to 15 years, you see a push up, right? You always see a change, right? We believe right now we are at new levels. So 2005, 2004, on average 2008. Right now the average is about 4,000. That's the price right now. Of course, at the peak, it went up to as high as 7,000. This was during COVID. Today we're averaging about 3,800 to 4,000. Now what we found interesting is this, right? Because palm oil is so unsexy, and really no one looks at it. The last time we saw a re-rating in palm oil was back in 2005, 2006, when there was this big push for biodiesel. And ladies and gentlemen, that was almost 20 years ago. Yeah, we have not seen a re-rating since. So what is happening today, we see a laggard effect, is that all these plantation companies are actually earning very good profits today at 4,000 bucks, right? So imagine if they were profitable at 2005, imagine their margins at 4,000 on average, because there's no additional cost, right? Whatever they sell, the selling price increases, it goes straight down to the bottom, right? And our plantation index has not moved, yeah? It stayed stagnant. In fact, if you look at most plantation stocks, if you bought them 10 years ago and you held it to today, it's about the same price, okay? So the question is this industry or this sector ripe for re-rating? Yeah. Because now, so what really has caused this to happen, what has really caused this to happen. So this was actually done by Goldman Sachs, and they actually captured all the normal investment flows. So if you look at the light blue line that goes all the way hyperbolic versus the line that goes horizontal, so that's the line that goes horizontal is what investments have been put into traditional industries, traditional brick and mortar, plantation, land, and so on and so forth, right? The light blue line is capital allocation to anything technology related, right? So what has happened, we're seeing now, the long-term trend in the next 5 to 10 years, because of underinvestment in the primary industries, right? And like it, not all of us still got to eat, we got to makan, we got to be here, right? They got to build buildings. There's still a lot of real world stuff that is still in demand, right? So two things has happened. Number one, because of COVID, right? COVID, we all had to stay at home and a lot of industries took a break. Now, the thing about commodities, whether you talk about gold, you talk about silver, you're talking about aluminum and so on and so forth, you can't, let's use palm oil as an example. You can't pour in money into palm oil today and expect an increase in production tomorrow. It does not work, right? Because it is biological. That means you must have planted that seed 4 years ago to actually get supply today. Does it make sense? Yeah. So pure capital allocation is not going to speed up that process. Now, during COVID period, a lot of replanting was at an all-time low, right? But every day we still, whether like it or not, you probably just have breakfast or lunch, you probably likely had palm oil. If you had your teh tarik, you had palm oil in there, right? So number one, you're actually looking at underinvestment. Number two, because of COVID, a lot of replanting didn't happen. So if demand continues to move in that direction of consumption, you're actually likely going to see a short supply and likely going to see higher prices for very staple industries, not just palm oil, right? So I'm going to talk about Bursa Malaysia, so that's why we talk about palm oil, which I think it's been extremely overlooked. So this is the difference between palm oil, soybean, and you can see the difference, right? So soybean is always more expensive than palm oil. Palm oil always trades slightly lower. So you can see that even soybean is still tracking higher. We're still at, on average, 4,000 ringgit per metric ton for palm oil. So going forward, what things that are exciting us about. So last year, one of the things that we did was we actually drove down to Johor, JB, and kind of have a look around and see what's going on. I think there are a couple of positive things that are happening that we're seeing some spillover effect. Last year, what has happened is that Singapore has stopped issuing licenses for data centers in Singapore. Simple reason is there's just not enough power to guarantee these data centers, right? And a lot of these big MNCs or big tech guys want to build their data centers in Singapore because the submarine cables for Asia actually end up in Singapore, right? So it's proximity. So what has happened instead, because Singapore has stopped issuing licenses, they've actually come into JB. They've come into Johor Bahru. I think our last count, there are about 80 data centers that are being built in JB itself, right? Again, proximity to where the submarine cables end. This is very significant. We're probably likely going to see some REITs or data center REITs that are going to be spun off after that. But these are not local companies that are coming here. You got the likes of your Microsoft, your Amazon, and so on and so forth. They're actually here building data centers, right? And one of the interesting things that we saw that spillover effect will likely come into Johor, the Singapore spillover effect, is that the RTS link that they've been building since 2019, right? So it's interesting, right? We built 2.6 kilometers. It's taken us 5 years to build it, right, of rail. But essentially what that rail does, it gives the people direct connectivity to the MRT. So it's really an extension of Singapore's MRT. Very significant, yeah? Because you don't build a big, like say shopping mall and don't build the roads to it, right? So I think connectivity is probably one of the main pointers here. So, and then our Prime Minister, very recently, I think a couple of weeks ago, he was down in Johor and said that they were signing a special free trade zone, or free economic zone. Now, this is extremely significant, yeah? So if you talk about free trade zones, basically what a free trade zone is it's a geographic area that they've cordoned off, and they've decided that the laws in this geographic area is different from the rest of Malaysia, yeah? I understand things like not needing passports to go into Singapore is on the table, right? So it's a QR code. You just walk in and walk out from a free trade zone, right? So there's quite a big spillover effect. Just to give you an idea, Singapore has done extremely well, and because we've done extremely well, in terms of housing, it's gone through the roof, right? To rent a room in Singapore right now, it's at least 1,000 Sing dollars, at least, right? So it actually goes higher, right? So you move into Malaysia, you're looking at 3,500 ringgit a month. Here you can own your own apartment, right? So one of the biggest beneficiaries immediately you're going to see around this space, it's actually going to be real estate, yeah? JB real estate, yeah? So that's upcoming. So I just want to share a little bit. So this was updated as of Jan. We've moved up a little bit higher because the market has moved up. This has been our fund performance since we started in August, September, October, November, December. Yeah, so we start a new portfolio every month. This has been our fund performance. So we have, I think our best performing fund now in the last 3 months is up about 8%. Yeah. And the strategy we use is exactly what we're just trying to find laggards, right? We're trying to find laggards. We're trying to find price and value divergence. Yeah, and we are quite optimistic about the JB play. So these are some of how we have spread out our portfolios. And I also like to share. So this is as of 12 Jan, but these are our top 5 holdings in our fund at the moment. I think I made it just in time. Thank you very much, everyone. I'll be back for a Q&A at the end. Thank you.